Let's talk about Remgro, because that point gets made by Johan Rupert very often. Remgro, of course, was established in the 1940s by his daddy, that's Anton Rupert, and it was originally a tobacco manufacturer. Remgro comes from Rembrandt, which was the cigarette brand. But in 2008, the Rupert family blew it all up, reorganized the whole thing, and Remgro emerged after the dissolution of British America Tobacco and Richemont and all of that, as a South African-based only industrial and financial investment holding company with more than 30 investee companies, but it's got an aggregate market capitalization of 86 billion rand. That's currently done very well recently, however. Price to earnings ratio of 18, dividend yield of 1.7%. Gerbrand, it's ended up principally focused on those financial and industrial holdings. A big part of the value there is the sort of first Rand merchant holdings, insurance and financial groups. But just take us through what you're looking at when you buy Remgro.
Yeah, you mentioned those. Then you got some Unilever exposure. You got lots of Mediclinic exposure. You get lots of Rainbow exposure, some Grindrod exposure, and then a few various other unlisted entities. Unilever is unlisted as well. Right. That's a nice business to
And that's
to
Unilever South Africa, not Unilever Holland, which is a global multinational. They own a stake in Unilever South Africa.
Yeah, certainly, and they do business in Southern Africa, etc. as well. So not a bad bunch. I think there's 30% unlisted within that sector. But if you look at their track record in the old days, I mean, out of Venfin, Vodacom came, and all of the other nice shares that actually unbundled from them. We know that they've, over the last year or two, they've unbundled some of its smaller stakes within Impala.
Yes.
They've unbundled their Transex shares.
Yeah.
But this is
that was a real gift.
Yes, certainly. But this is a net asset value play. They normally trade at about a discount of between 10 and 15%.
Okay, but that NAV is based on a director's valuation, because clearly you can take the stake in First Rand and MMI and RMI and all of that stuff and just put it there. But those unlisted stakes, by definition, the directors have to value what Air Liquide is worth, or Air Products rather, what the stake in Total South Africa and the Unilever and the Robertsons and all the other bumps in there. So that gets determined on like a 6-monthly basis and reported upon. But all things considered, what you're implying is that they ought to trade higher based on the underlying value, right?
Yeah, I think at the moment it's about 12 or 14% discount that they're trading at against that. The last one that we had on the unlisted was I think in December. Yeah. But certainly they tend not to overprice their assets. This company has a very long history of beating JSE returns. Yes. So certainly I think within the specific sector, it's probably
that's the point I wanted to make earlier, is that sometimes when they have these annual meetings and people go down to Stellenbosch or wherever they have them, or Ehrenvale or something, then Johan Rupert attacks the fund managers that come there, because he says their costs are higher, the fees they charge are higher than these guys are charging at the core in terms of the way their head office runs. Because the head office is really, the CEO used to be the chief investment officer, Yanni Durant. He's about our age and he's a hotshot investment sort of specialist. And they sit there with all these pots of cash deciding on what to do with the portfolio, but they have a slow hand on the rudder. They don't do things fast. When they take big stakes, they take big chunky stakes like the Grindrod move. Yes. They tend to hold things for the long term. I mean, look what's happening with Rainbow. They had it forever and everybody thought it was a dog. Now they've funded the acquisition of that Food Corp stake. So they do work their assets. They do seem to be adding value.
Certainly. I think in the old days they used to use British American Tobacco, of course, for their cash cow type of investment, and from those earning streams they started investing into other operations.
And it's important people pay attention, because that used to be the only way you could buy British American Tobacco was through this, but that's not in it anymore. Now people have got that direct.
I think a zero holding within Remgro. That used to be the star performer. Yeah. And it's been a star performance from its unbundling, etc. as well. But certainly that's what they actually, I think, used in the old days for cash flow, and they started investing into others. But they've been well strategically. I think you mentioned that they're not selling and buying every second day. I think they're doing investments actually probably better than most fund managers out there.
And they get to see a certain amount of deal flow because they are of that scale. So two things come to mind. The Grindrod thing, Grindrod needed a backing shareholder. They needed to raise capital to do their, I don't know, port expansion in Maputo or something. And then there's also that bandwidth business, Dark Fiber Africa, which is putting fiber networks around the country. Again, they needed, I don't know, R1 billion or something. And then Venfin, with the background and the tech sort of interest that they'd had, it made sense to go to the Remgro guys. So they see that kind of deal flow and those kind of opportunities. That's another positive about the stock, right?
Yeah, certainly, and I think they probably get some unlisted deals that most other guys won't be able to get in the sector, and that's probably the flavor that you want out there at the moment.
Okay, well, let's bring this to a head. So here we have an entity which is an investment holding vehicle, smart managers, low costs, diversified industrial and financial interests, no mining really, no offshore type stuff. Are you hot on this one? Do you reckon that at this kind of price, it's run quite a lot? It's almost $180 or something, having been down at 40 a couple of years ago. You hot on it?
Yeah, I think from a volatility's perspective, this company does bode well for a long-term portfolio in South Africa. So we like the underlying assets, so we're still hot on the share. Although it's not as cheap as it used to be, because the underlying shares has done well. We know what happened with FirstRand the last year or two.
Exactly.
We know what happened with Mediclinic. Even Grindrod has a huge appreciation in share price over the last year. So certainly not the cheapest thing out there at the moment, but I think against the rest of the market in the industrial space,
right, and
not as
one-stop
expensive
option. Good, okay, I'm hot on it too.